We're live and we are letting people in. I see participants coming. That's a good sign. I'm going to wait just another moment or two and let a few more people log on. I'm Bill Baldwin of Boulevard Realty. We're going to be talking about state of real estate, our last market report for 2020, which is reflective of the sales through November. So we're glad that you could be with us here live. If you are catching this later, we're happy to email you any of these slides. And just want to share with you this information that we have. So I'm going to go ahead and get started kind of talking about the state of the market. I'm going to share my screen here. I'm not the best with this. Hopefully you can see this. We've been doing these most of the year, especially live stream after COVID took over our lives at the middle of March. And as we've seen the last few months, I mean, we've just had record sales in real estate. And this report's going to be moderately brief because there's not a lot of new information that I haven't said in the previous months or whatever. The state of the market continues to be extremely strong, and the numbers are reflective of that in every category. When you compare this November to last November, I mean, it's record sales, record dollar amount, record number of transactions, record market price, average price, median price, and it continues to be a function of supply cannot meet up with demand. The demand has been greater than the amount of inventory. And this little summary sheet is saying that very thing. I'm not going to go over in detail because I'm going to switch over to another report in just a second, but continuing the same trend that we had last month. I mean, November was actually even the very best month. If I compare this November to the previous November, you know, here's the actual transactions. Talking single family homes in the greater Houston area, the number of closed transactions were up by 26%. The dollar volume up by 45%. The average price up by 15%, the median price up by 12%. And once again, we're comparing to what was a record year. You know, we're comparing to one of the best years in the history of Houston real estate, and compared to those months, it's record number of transactions and sales or whatever. And, you know, if you continue on and you look compared to a year ago, you know, it's the same thing. The total dollar volume, this is comparing January through November of last year to January of November of this year. Number of closed sales year to date, Arthur, up by 9%, dollar volume up by 15%, average price up, median price up. You know, it's everywhere you see that. The only area that's really been down, as you might have expected, has been basically the high-rise market. And it's because many of them were very difficult to sell and show in the strongest months of COVID. You couldn't use the elevator. They didn't allow outside vendors in. They didn't allow real estate agents in. So that market has struggled to some degree. But, you know, even townhouses are doing well compared to, you know, last year. It's not doing as well as the single family market because you can assume people are wanting more space, a front porch, a backyard, a study, more space than they would have gotten maybe even in a townhouse. So, and you're seeing the trend, many people who were in a high-end rental unit inside the Loop can move to suburbia at 2.75% interest rates, you know, buying a house from $200,000 to $300,000, you know, your mortgage payment significantly less than your rental unit was, and you don't foresee working back and commuting in the same fashion anytime in the near future, you know, and it's still unclear how the work world is going to be modified after COVID-19. I think most of us see a light at the end of the tunnel. The tunnel, we're just getting into the tunnel, and so it's going to take, you know, a number of months to clear the hurdle of COVID-19. Certainly, probably by the middle of the summer, we're going to be back to some form of post-COVID. And what is the new normal? I'm not sure we're going back exactly the way that we were, and I don't think anyone really knows for sure. Some people and some career paths are going to allow for more remote working than ever before. Many people want to go back to the way it was, and I think you're going to find some hybrid of those two things. So, the market is strong. I believe there's every indication that December's numbers are going to be very similar to, October, November, and September's numbers. May not be up 45%, but it's going to continue to trend upward. You look at some of these statistics. Houses over $750,000 up 88% over last year. I mean, these are tremendously record numbers of transactions, and really it's recovered where it's almost all price points. But the headlines, we're all getting these headlines. What is the future of work? And that's going to dictate a lot how housing trends follow in 2021. And I want to focus just a bit on what I think more about 2021 than I do November and December. Like I say, I'll show you where I believe December's numbers are going to continue to be up, because that's just the trend that we're seeing. But most people, Realtor.com, I've heard a presentation already from Dr. Jones and Ted Jones, and we'll be hearing more from him, especially at the beginning of January, specifically on residential real estate. But I mean, the general consensus is that we're going to continue to trend upward in 2021. We're not in some bubble that's going to collapse. Certainly, I want to be sensitive to the people who are hurting, and I want to recognize commercial real estate is in for a world of hurt through 2021. I don't see it recovering anytime soon. Certainly, the retail segment is going to have a difficult time in January and February, and we're going to continue. I think there's people just barely hanging on, and I'm not sure they're going to be able to make it. So be sure to support local all that you can. So retail, commercial, and of course the oil segment is not going to be in any rapid recovery in 2021. It's going to take years, people to resume their travel, the jet fuel purchases, and all those sort of things. If it weren't for Amazon, I mean, I'm not sure how gas prices would even be what they are today. But you're going to continue to see these trends. More first-time home buyers purchasing homes. That's going to keep suburban prices in check. The migration further out of the urban core, as you don't have to commute as much. The desire for home offices. The ability to be able to do something similar, hunker down again if we need to for whatever reason. So better utilization of our spaces, where we may not use the living room, and maybe we have an office instead of a living room. And we were headed in that trend years ago. I remember designing and selling several homes that didn't have a formal living room, and we just had a study instead. And if you didn't need the study, you use that for the formal living room. But I think this was just Dr. Jones is tweeting out this, and we'll be discussing this more in January also. If you just look at the first week of December, same thing. We're pumping up a fraction of the listings, but remember, we're still off over 30% of the number of listings. So you're selling 35% more homes with 35% less inventory. We need a little inventory so that people just don't get frustrated. But the number of pending sales for the first week of December, up 14%, which is a very good sign. People are taking their houses off the market and not putting them right back on. They want to get through Christmas. They maybe don't want to show in January and February. The weekly closings, the first week of December, the closings were up 49.5%. That's, through the 7th of December. I mean, that's pretty strong indication that December's numbers are going to be very similar to November's. The number of showings compared to 1 year ago, up 22%. So you're showing 22% more homes with 30% less homes to look at. I mean, that's a pretty impressive number also. And just same thing, the level of interest, the number of people going to har.com, up 49%. I mean, this is just an indication of people who are frustrated in the marketplace because there's not a home. They want to buy a home. They're waiting for a home to pop onto the market. And many price points, of course, you're still seeing multiple offers. That happens more in the lower price points, low being a relative number depending upon the neighborhood. But I still see tremendous pent-up demand for a home and a continued lack of supply, which is where we started the year. I mean, that really determines the number of things. And I do believe the job market is tougher in Houston, Texas than it was when oil's at $80 a barrel. But you do see positive signs, even if it's Tesla and Elon Musk moving to Austin. It's hinting towards a trend. People leaving very high valued states like California and New York, moving to more progressive middle America cities. Nashville, Austin, Atlanta, Houston is in that deal. We're competing with those cities for quality of life and places, great places with great schools and great outdoor environments or whatever. And we're going to continue to do that. You want to applaud Hewlett Packard for moving also to the northern Houston area. That's the type of industry, continuing to work on tech and these transitions, addressing climate change and the changing oil environment. I mean, that'll be a challenge of Houston in order to attract some of those jobs and make sure that those jobs are high paying jobs, not just low paying jobs or whatever. So, I mean, I'm pretty bullish on 2021 being, somewhat of a roller coaster. You're going to compare in the first quarter. When you start comparing to March and April, the numbers are going to be up. We were in lockdown for, and adjusting to COVID-19 for those months. It'll be curious to see, can you compete with these record numbers a year from today? And I'm not sure that you really can. I mean, I think some of this is just pent up demand from earlier in the year pushed towards later in the year. So I know the psyche of people's often determined by the headlines. The headline's going to record sales, low inventory, tremendous demand, bidding wars. You're going to keep hearing that all through December. End of the year recap is going to focus on how well real estate did in 2020 despite the pandemic and despite the oil situation. I think it'll continue through the first quarter of January and February, March, April. All those months are probably the headline's going to be positive. And it's going to be a function of, do you get a certain amount of buyer fatigue, just frustration in the marketplace? I don't think you're going to see any rising interest rates because the national economy and the worldwide economy just isn't going to be that good in 2021. There'll be pockets that do better than others, but I mean, it's just, we're going to have a longer road of recovery, especially say retail, small businesses, the commercial world, oil, airlines, hotels, they have a long way to go. And so we've been fortunate that while there were a number of losers, there were a number of winners in 2020, which kept some stability there, but we have a long way to go. So interest rates continue to remain low. We must worry about inflation at some particular point. We have to worry about rising pricing, pushing people out of the marketplace. You saw rising FHA loan limits at this last month or whatever, which is a good news for people entering into the first time home buying market in 2021, making it a little easier for people to buy a house that's priced a little higher than it used to be. But it's just a function of inventory and supply and demand. And I don't see where the inventory can anywhere reach the records that we had in 2019, even in 2021. You won't recover that number. It's too vast a number there. You're not going to see mass buyouts because people aren't going to be as mobile as they used to be. They're going to hunker down a little bit longer. And so you're just not going to see the massive amount of inventory that we had. So it's not going to be a normal year in 2021. It's going to be a hyper local year again. And many micro areas, pocket neighborhoods are going to do particularly better than others. And you're going to have to continue to look at new areas beyond your comfort zone, for some forms of housing, because you're just going to get priced out of the market in certain areas. So I think it's important that you just, continue to work with your real estate agent, look at the micro level, try not to get too frustrated. I think for buyers, there's going to be more inventory than there has been in the past. I think you're going to see houses pop on the market sooner than they would have before, which will help the months of January and February. And that's probably a strategy for some sellers. Get a head start on the selling season in 2021, which means immediately after Christmas, get your house ready to go onto the market. Get rid of Christmas quicker than ever. Do your painting, do your decluttering, fix up your yard a little bit sooner, and maybe get a head start on the selling season. And I think that's just a strategy that you need to look at. If you're a buyer, you're competing with less people in the months of January and February, so don't get into the mad rush of the end of March or April. Maybe try and buy a house a little bit sooner than you would have otherwise done. I mean, it's going to be a frenzy again by the time we get to March, April, and May. So I think the economy will settle down, the country will settle down a little bit more. Let's hope for some rising oil prices. That's always good for Houston, Texas in every segment. So overall, a record year, and we'll say that again in January. Just, you hate to keep saying the same thing over and over again, but it truly was a remarkable year of resiliency for housing in Houston, Texas. And for that, really, everyone should be very grateful. Even if you're a renter, nobody wants falling housing pricing. It's not good for any economy anywhere. So continue to just stay focused. We're going to continue to provide you with accurate and up-to-date information as much as we can. And I don't want to take too much of your time because it's almost like saying the same thing over and over again. Francis, do we have anything in the chat?
Yes, we did have one question from Cynthia Mullins. She was just asking if those Ted Jones numbers were for Houston or for the nation.
That was he was just tweeting the Realtor.com's projection. Those were not his projections. I sat in on a presentation that he gave to commercial lenders the other day, which was very informative about all segments of the Houston economy. And he was bullish. He did not offer his projection for residential real estate, but I will tell you that I think it's going to be up again. He's not going to project a decline. I'm not sure it's going to be, a 7% increase, but I think he's going to think that for the year of 2021, by the time you take the first 6 months where you're going to be up pretty significantly, and then you may not be up so much at the last quarter or so of 2021, still the overall picture is going to be positive for single family homes. But he'll give his projection. To answer your question, that was Realtor.com, and that was a national number. The 7% increase, and the increase in price was a nationwide deal. It wasn't local, but he'll be giving his, and we moved our Boulevard meeting just so that we could hear his presentation before that meeting. So I think it's the first week of January he'll make those predictions. Any other questions?
I think that was it.
Okay, everyone have a great day, a happy holidays, and we look forward to visiting with you more about these market reports in January. Have a great day, everyone.